Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Okay, welcome everybody. This is Grant. Hey, I've got some exciting things to go over here with you today. Here we are in the middle of the summer, getting nice and hot. Maybe not nice, but it is definitely getting hot. Talking about things rising, like the temperature, I've been watching the recent rise in oil futures and thought, hey, let's take a look at how the market engine and the market effectiveness chart provide signals on oil futures. So what I've done is, if you go to financialinvestingradio.com, if you go down to the podcast charts and video section, and open the charts for FIR number 24. I've put two charts there. One is the market effectiveness chart. The other is a trading chart that has the market engine indicator on it. Anyway, open those up. You can follow along. I'm going to show how to use these two charts in making trading entry decisions. So this would likely, of course, be for someone that's looking to do intraday trading, of course. All right, so if you got those open, I'm going to start first to orient your eyes on these charts. On these charts, I have put some numbers. So you'll see 1, 2, 3, 4, 5. Those correspond to what I call the gear shift. Now, the gear shift is on that red correlation line on the market effectiveness chart. You can see there's a horizontal line that says a 0. It's got a 0 on it. And then when it dips below, when the red dips below and comes down and it gets close to that dashed blue line, or even just crosses that 0 line, I call that a gear shift, all right? So the deeper the better, in the sense that it gives us a stronger misalignment, which gives us opportunities. And one of the reasons why it was important for me to have something like this is because I don't want to sit and just watch the markets constantly. I'm more interested in knowing when's the time that I should turn around and take a look at what's happening in the market. So the market effectiveness chart does that for us, and in particular, this gear shift. So if you have other things to do during the day, you can get those. Let's say you might have the market open, if you were an intraday trader anyway, and when it crosses below and starts to come back up, that's your time to do an evaluation, right? To take a look at where the market is. So I'm going to go through 7 of these. Let's look at what that trade looks like. So on the first one here, so gear shift number 1. And before I keep going, on the trading chart, I also put the numbers as well. So 1, 2, 3. You'll see it up on the price on the market trading chart. You'll see it down on the market engine indicator. So you can get a sense of what it looks like. And one of the best things to do is to cover up, the charts. So cover up everything to the right, up to that number, okay? And when you cover it up, then you get a sense of what really did I know at that moment in time. And that's what this is about. It's about making a decision at the hard right edge of your chart, which at this point in time is going to be at the point of number 1 or at the point of number 2. And so the key is to look at that. And I should also point out that never trade the market never trade the effectiveness charts gear shift as your trade entry. Don't do that. That's not the intent. The intent is that gets your attention to say, all right, now let's look for the setup. So I'm going to walk through the setup. In fact, this first one it actually gives us one of those setups. So let me walk through that. Okay. What's happening here is the market's opened, and as you can see, it's coming up. this is actually going to be a bullish setup, right? So there's a couple key things that we get off of the market effectiveness chart that gives us our initial signal. One of those is certainly the gear shift. That's the first thing. The second thing you look at is, what are the bars doing? What are the candlesticks doing on that? Is there a bullish bias, or is there a bearish bias, or is it a two-sided market, right? And so you trade each of them differently. Clearly, this one is a bullish bias. So now what you know up to this point on number one, if you were to cover up the charts, is you can see it's a bullish bias. So even as price has dropped and gone down, so you look over the price chart and you can see the misalignment. The misalignment is price has dropped down, but the market effectiveness chart continues to push up. So which way do we think the high probability opportunity is? Well, that's to the upside, right? All right, so that's the setup. The first setup is number one. On gear shift number one, there's the gear shift. The second part of the setup is you look at the bars on the market effectiveness chart and you see, did they follow price, or did they ignore price and continue to rise? That's important to note because you trade it differently. In this case, while price had been going down, the market effectiveness chart bars continue to rise up. So how do we trade this? Well, the way we trade this then is we draw a trend line on the trading chart from the peak that's to the left of the number one. If you can see that, you draw that trend back there, and when it breaks that trend and comes above that, you trade that to the upside. Okay, so that would be a long opportunity. All right, so that's the first gear shift. Let's look at the second one. Turns out the second one's very similar. So if you look at the second gear shift, so number two on the red, then you look above it on the market effectiveness chart and you say, okay, what have the bars been doing? Well, the bars are still going up, even though as you go to look over on the price chart, you see price right by number two has just been going down. So that gives you more confidence that what you want to do is you want to draw a trend line, and then coming down across that, and as it breaks above it, you're going to take the bullish entry and ride that as far as you can. And depends on, on your staying power with it, right? How long you actually hold that. That's a whole other conversation, which is more around trade management, but I won't talk about that anymore at this point. For now, we're just going to look at good opportunities for entry. So gear shift number three is very similar as well. So again, similar kind of thing. It pulled back real slightly, but it sure gave a pullback or a gear shift on it. Again, the bars are still going up, and it's important to note on this one that you can see the bars just to the left on the market effectiveness chart started to pull back a little, but they never did get closed below that 8 green EMA line, that moving average line. And so that continues to show strength still going up, even though there was a pause in price. So again, the trade opportunities to the upside. And I wanted to point out also, in one of the podcasts, I talked about market engine indicator patterns. So if you look at the green line on the market engine indicator, this was a halfback. The halfback trade pattern is when the green line starts at one of the extremes. In this case, it's at the top, but it could also be at the bottom. But in this case, it's the top, comes down to about the halfway, and then breaks up in the direction of where it came from. When you've got a halfback pattern like that, and you've got a market effectiveness chart that's being bullish like that, very high probability that the trade is still to the upside, which is what it was in this case. Now that starts to change when you get over to number 4. Take a close look at number 4. What's happening here is we got price is starting to chop sideways and a little bit up. So it's edging up, it's going sideways, but when you look at, so there's a gear shift at number 4. Kind of hard to tell at that point because it's just chopping, so you need more help. So you got a gear shift on number 4. You look at the market effectiveness chart, it's still continuing to go up, but what you have is you have a hint going on with the market engine indicator. You have a divergence that's taking place. Price is slightly drifting up, but in the same breath we've got a divergence where it is falling back. in that case where it's not so clear, I typically will draw a trend line on the price and look for the opportunity for the break. The obvious break here is to the downside. Once it broke hard like that, then you'd look for an opportunity, because that's pent up. That's pent up pressure, right? The pressure is that it keeps rising up, and yet the buyers in the market are disappearing, is what's happening. Now, the key point here, though, and this is the most important trade on this particular chart, is that if you look on the market effectiveness chart near number 4 on the top, where the bars are, take a look at that. You'll see that candle, that bar came down, but it never did close below that 8 MA. And so what that does is that actually sets up the very next gear shift. So what's going on with that gear shift number 5 is massive sell-off. That was the pent-up pressure because the market engine indicator said, hey, the buyers are leaving because they can't push it up anymore. There were no more buyers to continue. So the market had to go look for buyers. So what basically happened is the effectiveness chart never did sell off, though. There was still plenty of volume and transactions and others that were keeping it up. Well, what it really meant, though, is that the market's really misaligned. It oversold, right? It got down too far. We get the gear shift number 5, and then what you've got is this great opportunity for you to take the trend line break to the upside, and so you took that. So that was number 5. That was actually the best gear shift of the day because it gave the most obvious misalignment between the two. So again, the trades to the upside. Let's look at 2 more here real quick. Number 6 and number 7 are actually similar. Here we've got on number 6 the gear shift on the market effectiveness chart. And then we've got on number 7 the same thing. If you look what's happening on price on both of those, you can see there is a brief pullback in price where price dropped right before it. That created the misalignment, even though the effectiveness chart kept going up. And so again, the trade was to the upside, not as much distance to be made. And even though I didn't put a number on here, if you look to the right, you can see after number 7, you can see price continue up, but you see the market engine indicator starting to slide off again. It actually set up for another bearish opportunity. Well, my dog's talking to me. He's saying, Grant, quit talking about this stuff. All right, guys, thanks for joining. The thing I wanted to point out real quick here is that the real key is to get to know a very small number of instruments to trade and to invest and get to know them really well. So strongly encourage you to spend the time. Pick 1 or 2 of them, get to know their personality, the general pattern of the market effectiveness chart and the market engine signals for that particular instrument. Paper trade it or virtual trade it for a while, right? Get the indicators on there. And you can reach out to me at grant@financialinvestingsecrets.com to get those. Paper trade them for a while, and as your confidence grows, then after that, then go live. But it's actually part of a bigger journey. And in my previous podcast, I talked about the roadmap to high probability financial control. Follow that roadmap. Go through that. You want to be safe as you do this. All right, got to go attend to the dog. Thanks everyone for joining. Until next time, trade safe.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.